Based on the historical data and forecast, Bitcoin shows a downtrend. The RSI consistently dips below 50, indicating weakening momentum. The forecast predicts further decline, and the price is expected to move below $110,000. The support price is stable at $111,700, which can serve as a potential entry point. We will implement a three-pronged strategy combining RSI, Bollinger Bands, and support/resistance levels. First, we will use the RSI strategy. When the RSI falls below 20, we will enter a long position at $111,100, setting a stop loss at $110,200 and a target price of $116,000. Second, we will use the Bollinger Band strategy. When the price touches the bottom of the Bollinger Bands, we will enter a long position at $109,800, setting a stop loss at $109,200 and a target price of $115,000. Finally, we will use the support and resistance strategy. When the price reaches the support price of $111,700, we will enter a long position at $111,700, setting a stop loss at $110,800 and a target price of $116,500. Considering the risks and potential rewards, we will allocate 40% of our capital to the RSI strategy, 30% to the Bollinger Band strategy, and 30% to the support and resistance strategy, creating a diversified portfolio for high returns. Based on the historical data and forecast, Ethereum shows a downtrend, particularly evident in the recent forecast prices consistently dropping towards $3,990. The RSI consistently remains below 60, indicating a lack of strong bullish momentum. Considering the support price of $3,910 and the downward forecast, a short selling strategy is recommended. We'll initiate a short position at $4,310, placing a stop-loss order at $4,500 to protect against unexpected price surges. The initial target price will be $4,040, aiming to capitalize on the anticipated downward trend. To refine this strategy, we'll incorporate Bollinger Bands. If the price breaks above the upper band, which is currently $4,790, it signals a potential reversal. However, given the downtrend and forecast, we'll maintain the short position. If the price touches the lower band, currently $4,080, it suggests a potential bounce. We will adjust the target price to $3,990 if the price reaches the lower Bollinger Band. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while minimizing risk, offering a calculated approach to navigating the current market conditions. Based on the historical data and forecast, XRP shows a downtrend, particularly evident in the recent forecast prices, which are consistently declining from $2.91 to $2.77. The RSI consistently falls below 50, indicating a prevailing bearish sentiment, and reaching as low as 39.6, suggesting an oversold condition. Considering the Bollinger Bands, the price has been trading near the lower band for a while, reinforcing the downward trend. Therefore, I recommend a short selling strategy, capitalizing on the anticipated price decline. We will enter a short position at $2.85, placing a stop-loss order at $2.95 to protect against unexpected upward movements. The initial target price will be $2.77, aligning with the forecast low for the week. To optimize the strategy, we'll employ a dynamic approach, using the RSI and Bollinger Bands to adjust our position. If the RSI rises above 30 and the price touches the upper Bollinger Band, we will consider covering the short position at $2.82 to secure profits. Conversely, if the price falls below the support level of $2.76, we will tighten our stop loss to $2.73 and set a new target price of $2.79, aiming to capture further downside potential. This combined approach leverages both technical indicators and forecast data to maximize returns while managing risk effectively. Based on the historical data and forecast, BNB exhibits a clear upward trend, supported by consistently breaking through resistance levels and a forecast predicting continued price increases. The RSI consistently fluctuates above 60, indicating strengthening momentum, and the Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. I recommend a long position strategy, capitalizing on this bullish momentum. Specifically, enter a long position at $1,020, coinciding with the first forecast price. Set a stop loss at $987, aligning with the established support level to mitigate potential losses. A target price of $1,060, the final forecast price, provides a reasonable profit target, anticipating continued upward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, consider a second entry at $1,030, as this indicates an oversold condition and a potential buying opportunity. The stop loss remains at $987. If the price touches the lower Bollinger Band, it's another signal to enter at $1,030 with the same stop loss. The target price will be adjusted to $1,060 if the price breaks above the upper Bollinger Band. This combined strategy leverages both trend analysis and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana shows a declining trend, with the forecast predicting a decrease from $230 to $211 over the next week. The RSI consistently falls below 80, indicating a lack of strong overbought conditions. However, the recent dip in RSI to 44.9 suggests a potential oversold condition, providing a possible entry point. Considering the support price of $211 and the bottom of the Bollinger Bands consistently around $188 to $195, a conservative strategy is recommended. I suggest entering a long position at $213, placing a stop loss at $211 just below the support level to limit potential losses, and setting a target price of $228, aligning with the recent resistance level. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently trading near the lower band suggests a potential bounce. Therefore, a secondary strategy is to enter a long position when the price touches the bottom of the Bollinger Band, which is around $195, with a stop loss at $188 and a target price of $226. Combining these two strategies, the most efficient portfolio would be a weighted average. We will allocate 60% to the first strategy with an entry at $213, a stop loss at $211, and a target price of $228, and 40% to the second strategy with an entry at $195, a stop loss at $188, and a target price of $226. This blended approach leverages both RSI and Bollinger Bands to maximize potential returns while mitigating risk. Based on the historical data and forecast, Dogecoin shows a fluctuating trend with a recent downward pressure. The RSI values indicate that the asset is currently in a neutral to slightly oversold territory, hovering around the 44 to 67 range. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I recommend a cautious, multifaceted strategy. Initially, we will employ a strategy based on RSI, aiming to capitalize on potential rebounds from oversold conditions. We will enter a long position at $0.247, with a stop loss set at $0.237 to mitigate potential losses if the downward trend persists. The initial target price will be $0.268, reflecting a moderate appreciation based on the recent historical price movements. To further enhance the strategy, we'll incorporate Bollinger Bands analysis. If the price touches the lower Bollinger Band, indicating an oversold condition, we will enter a long position at $0.244, setting a stop loss at $0.237 and a target price at $0.266. Conversely, if the price approaches the upper Bollinger Band, signaling an overbought condition, we will consider a short position, but given the overall neutral trend, we will prioritize the long positions based on RSI and Bollinger Bands. The portfolio will allocate 60% to the RSI strategy and 40% to the Bollinger Band strategy, dynamically adjusting based on real-time market conditions and further analysis. Based on the historical data and forecast, TRON demonstrates a slightly downward trend with fluctuating volatility. The price has been trading within a defined range between $0.315 and $0.341. The RSI indicator fluctuates around the 50 mark, indicating indecision and a lack of strong directional momentum. The Bollinger Bands show periods of contraction and expansion, reflecting the changing volatility. Considering the forecast for the next week, the price is expected to decline slightly, hovering around $0.335 to $0.341. Therefore, I recommend a cautious, short-term trading strategy focusing on potential pullbacks. My strategy is to implement a short position when the RSI exceeds 55 and the price touches the upper Bollinger Band. Specifically, enter a short position at $0.341. Set a stop-loss order at $0.347, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly rises. The initial target price is $0.335, aligning with the forecast and the lower Bollinger Band. If the price continues to fall, a secondary target price of $0.334 can be considered. This strategy balances risk and reward, capitalizing on the anticipated downward trend while incorporating technical indicators to refine entry and exit points. Based on the historical data and forecast, Cardano shows a declining trend. The RSI consistently falls below 60, indicating a lack of strong buying momentum. The forecast data further reinforces this downward trajectory, predicting prices to fall below $0.8. Considering the support price of $0.773, I recommend a short selling strategy. Entry price will be $0.85. The stop loss will be set at $0.89 to protect against unexpected upward movements. The initial target price will be $0.773, aligning with the established support level. To enhance the strategy, we'll incorporate the Bollinger Bands. If the price touches the upper band, around $0.949, it could signal a potential short entry point, but with a tighter stop loss at $0.97. If the price falls to the lower band, around $0.794, it suggests a strong bearish momentum, reinforcing the short position. The final target price will be $0.76, based on the forecast data. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently hovers below 60, indicating a lack of strong bullish momentum, and the forecast RSI is expected to decline further. The price is currently near the support level of $4,200, which suggests a potential bounce. However, the forecast indicates a continued downward trajectory, reaching as low as $4,310. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces near the support level, combined with a cautious approach to the overall downtrend. My strategy involves a long position entry at $4,310, capitalizing on a potential bounce from the forecast low. The stop loss should be set at $4,200, just below the support level, to protect against a further decline. The initial target price is $4,500, aiming to capture a short-term upward movement. If the price reaches $4,500, we will consider moving the stop loss to break even. If the price continues to fall below $4,310, we will exit the position and consider a short position strategy when the RSI reaches an oversold level below 20. This approach balances the potential for short-term gains with the overall bearish sentiment. Based on the historical data and forecast, Chainlink exhibits a downtrend. The price has been consistently declining from September 10, 2025, and the forecast for the next week further supports this downward trajectory, reaching as low as $20.5. The RSI consistently falls below 50, indicating weakening momentum, and the Bollinger Bands show the price nearing the lower band, confirming the bearish sentiment. Therefore, I recommend a short selling strategy. We will enter a short position at $22.4. The stop loss will be set at $25.4, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The initial target price will be $20.5, aligning with the forecast low. To refine the strategy, we'll incorporate the RSI. If the RSI rises above 60, signaling an overbought condition, we'll consider covering the short position and taking a partial profit at $23.5. Conversely, if the RSI drops below 40, indicating an oversold condition, we'll consider adding to our short position at $21.5, with a further target of $20.9. This adaptive approach, combining trend analysis, Bollinger Bands, and RSI signals, aims to maximize returns while effectively managing risk. The overall strategy is a short position with a dynamic adjustment based on RSI and Bollinger Bands, designed for a declining market. Based on the historical data and forecast, Ethereum Classic demonstrates a clear downtrend, particularly evident in the recent forecast prices consistently below $19. The RSI consistently dips below 40, indicating oversold conditions, while the price is nearing the support level of $18.7. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential for a significant price move. Given this information, I recommend a contrarian short strategy. Enter a short position at $19.4, placing a stop-loss order at $20.5 to protect against a potential reversal. The initial target price is set at $17.7, aligning with the forecast price on September 29, 2025. To enhance the strategy, I will incorporate a dynamic adjustment based on the RSI. If the RSI rises above 50 during the trade, indicating a shift towards overbought conditions, I will adjust the target price to $17.9. Conversely, if the RSI drops below 30, confirming a stronger oversold condition, I will consider lowering the stop-loss to $19.2 to potentially capture further downside. This adaptive approach aims to maximize profit while effectively managing risk in this declining market. Based on the historical data and forecast, Ether.fi shows a fluctuating trend with support at $1.45 and resistance at $1.61. The RSI fluctuates between 56.7 and 72.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands consistently narrow, suggesting periods of consolidation followed by increased volatility. Given this analysis, I propose a combined strategy leveraging RSI and Bollinger Bands to maximize potential returns. The strategy will involve a tiered approach. First, when the price touches the support price of $1.45 and the RSI falls below 20, enter a long position at $1.45. Set a stop-loss at $1.43 to mitigate potential losses. The initial target price is $1.53, aligning with the forecast price and the upper Bollinger Band. If the price reaches $1.53 and the RSI is below 80, move the stop-loss to the entry price of $1.45. The second target price is $1.6, aiming to capture further upside potential. If the RSI reaches 80, close the position and reevaluate the market conditions. This combined strategy balances risk and reward, capitalizing on both momentum and volatility. Based on the historical data and forecast, Trust Wallet shows a volatile upward trend. The price has broken through the resistance level of $1.44 and is currently trading around $1.2. The RSI is fluctuating between 50 and 90, indicating periods of both overbought and oversold conditions. The Bollinger Bands have widened, suggesting increased volatility. Considering these factors, I propose a portfolio strategy combining RSI, Bollinger Bands, and support/resistance levels. First, we will implement a strategy based on the RSI. When the RSI falls below 30, it indicates an oversold condition, and we should consider a long position. For example, when the RSI is 67.7 on September 23, 2025, and the forecast price is $1.11 on September 24, 2025, we will enter a long position at $1.11. The stop-loss will be set at the support level of $0.938. The initial target price will be the previous resistance level of $1.44. Second, we will use the Bollinger Bands to predict price movements. When the price touches the bottom of the Bollinger Bands, it indicates a potential buying opportunity. When the price touches the top of the Bollinger Bands, it indicates a potential selling opportunity. Third, we will use support and resistance levels to determine the entry price, stop-loss price, and target price. Combining these three strategies, the final portfolio will prioritize long positions when the RSI is oversold and the price is near the bottom of the Bollinger Bands, with a stop-loss at the support level and a target price at the previous resistance level. This approach aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, PYTH network demonstrates a downtrend with significant volatility. The price has been fluctuating within a range between $0.149 and $0.182, with recent support at $0.149. The RSI has consistently remained below 80, indicating a lack of overbought conditions, and recently dipped below 50, suggesting a weakening momentum. The Bollinger Bands have been widening, reflecting increased volatility, and the forecast price indicates a continued downward trend, reaching as low as $0.148. Considering these factors, I recommend a short selling strategy to capitalize on the anticipated price decline. The entry price for the short position will be $0.169, capitalizing on the recent price action. The stop loss will be set at $0.174, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.15, aligning with the recent historical low and the forecast price. If the price reaches $0.15, we will reevaluate the market conditions and consider adjusting the target price based on the subsequent trend. This strategy combines the downward trend, RSI signals, and Bollinger Bands volatility to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Aave demonstrates a clear downtrend. The price has been consistently declining from September 10th to September 23rd, and the forecast for September 24th to September 30th projects further downward movement. The support level at $270 has been tested multiple times, while the resistance at $298 has failed to hold. The RSI consistently below 50, with a recent dip to 35.1, indicates a bearish momentum. Considering this, I recommend a short position strategy. Entry price will be $283. The stop loss should be set just above the recent resistance at $298, at $300. The initial target price will be the support level of $270. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently trading below the lower band, reinforcing the downtrend signal. We will use RSI to confirm the short position. When RSI falls below 20, we will enter a short position at $283. If the price breaks through the $298 resistance, we will exit the position and set a stop loss at $300. If the price reaches $270, we will take profit. The second target price will be $257, based on the forecast. The strategy aims for a high return opportunity by capitalizing on the prevailing downtrend and utilizing technical indicators for precise entry and exit points. Based on the historical data and forecast, Quant demonstrates a downtrend, particularly evident in the recent forecast prices declining from $93.8 to $85.8. The RSI consistently falls below 50, indicating a weakening momentum and approaching oversold conditions. Considering the support price of $90.8 and the decreasing forecast, a short position is warranted. We will initiate a short position at $93.8, placing a stop-loss order at $97.4, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $90.8, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been approaching the lower band, suggesting potential for a bounce. However, the overall downtrend and bearish forecast outweigh the signal. If the price retraces to the center of the Bollinger Bands around $92.5, we will maintain the short position with a revised target price of $86.6, based on the forecast. This portfolio combines the RSI oversold signal with the trend analysis and forecast, offering a balanced approach to maximize potential returns while managing risk. Based on the historical data and forecast, Sonic exhibits a declining trend, especially evident in the recent forecast prices which predict a continued downward movement. The RSI consistently falls below 50, indicating a weakening momentum. The Bollinger Bands are also narrowing, suggesting decreasing volatility. Considering these factors, a short position is recommended. We will initiate a short position at $0.268, placing a stop-loss order at $0.286, just above the recent support level and the upper Bollinger Band. The initial target price will be $0.232, aligning with the forecast price for September 27, 2025. To refine the strategy, we'll incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, we'll hold the position, anticipating a potential bounce. Conversely, if the RSI rises above 80, suggesting an overbought scenario, we'll consider taking partial profits. The second target price will be $0.228, which is the forecast price for September 30, 2025. This layered approach, combining trend analysis, Bollinger Bands, and RSI signals, aims to maximize returns while mitigating risk by strategically managing entry, stop-loss, and target levels. Based on the historical data and forecast, BNB exhibits a clear upward trend, supported by consistently breaking through resistance levels and a forecast predicting continued price increases. The RSI consistently fluctuates above 60, indicating strengthening momentum, and the Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. I recommend a long position strategy, capitalizing on this bullish momentum. Specifically, enter a long position at $1,020, coinciding with the first forecast price. Set a stop-loss at $987, aligning with the established support level to mitigate potential losses. A target price of $1,060, the final forecast price, provides a reasonable profit target, anticipating continued upward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, consider a second entry at $1,030, as this indicates an oversold condition and a potential buying opportunity. The stop-loss remains at $987. If the price touches the lower Bollinger Band, it's another signal to enter at $1,030 with the same stop-loss. The target price will be adjusted to $1,060 if the price breaks above the upper Bollinger Band. This combined strategy leverages both trend analysis and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PancakeSwap shows a mixed trend with periods of consolidation and upward momentum. The RSI fluctuating around 50 indicates indecision, but the recent spike to 72.0 suggests a potential short-term overbought condition. The Bollinger Bands have been widening, indicating increased volatility. Considering the support at 2.64 and resistance at 2.86, and the forecast prices hovering around 2.77 to 2.84, a strategy combining RSI and Bollinger Bands is recommended. We will implement a strategy where we enter a long position when the RSI falls below 20, indicating an oversold condition, and a short position when the RSI exceeds 80, indicating an overbought condition. Given the recent price action and the forecast, I recommend a long position. The price is currently near the support level of $2.64. Enter a long position at $2.77. Set a stop-loss order at $2.64 to protect against a potential downside reversal. The initial target price is $2.84, aligning with the forecast and resistance level. If the price breaks through $2.84 and continues to rise, consider adjusting the target price to $2.95. This strategy aims to capitalize on the anticipated upward trend while managing risk through strategic stop-loss placement. Based on the historical data and forecast, Zcash shows an overall upward trend. The RSI values fluctuate between 53.3 and 66.4, indicating periods of both oversold and overbought conditions. Considering the forecast data, the price is expected to rise from $53.1 to $57.0. The Bollinger Bands suggest that the price is currently near the upper band, indicating a potential for a short-term pullback. Therefore, I recommend a long position strategy. Entry price will be $53.1, with a stop-loss placed at $51.5, just below the lower Bollinger Band. The initial target price will be $57, aligning with the forecast high. To refine the strategy, I will incorporate RSI signals. If the RSI drops below 30, indicating an oversold condition, we can enter a long position at $42.4, with a stop loss at $40.5 and a target price of $55.5. If the RSI reaches 80, indicating an overbought condition, we can consider taking profits or tightening the stop loss. The most efficient portfolio will be a combination of the long strategy based on the forecast and the RSI-based strategy. This approach allows us to capitalize on the overall upward trend while mitigating risk through strategic stop-loss placements and profit-taking opportunities.